Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow. I'm Khleif, and I'm thrilled you're here. And I know you're going to get tremendous benefit from the gentleman we're interviewing today. His name is Waner, and he's the president of Wehner Multifamily, a huge multifamily property management company. In fact, they manage over 22,000 doors, and just a very impressive company. I actually just watched a video on his services, and I was very, very impressed with the level of diligence and prep work that they do to help an operator as they're evaluating a property. So we're going to dig into that. Ryan, welcome to the show, my friend.
Hey, thank you. Thank you for inviting me.
Absolutely. You know, I just watched that video, and it's, shame on me for not watching it sooner, because it really speaks to how you've embraced technology to enhance the operator's due diligence process. So can you speak to that a little bit? Talk about some of the different pieces that you're utilizing to help an operator evaluate a property. I know you have this whole process you go through, and you create a lease audit and then an operating forecast based on getting engaged on a deal. So can you speak to that a little bit?
Yeah, sure. So typically when a potential client comes into us, and we get most of our referrals from current clients, they'll be looking at a deal to make an offer, and we'll go in there and put together a preliminary operating forecast or a budget. We call it an operating forecast because we don't deal with the debt. So we will go through there, source data from the over 22,000 units that we manage, and actually do a physical market survey of the property every time a request is made. In our experience, it's better to do it that way than to just go off a CoStar or ALN.
Sure.
We get more accurate data, and we get better input on what the actual interiors of the property look like and the exterior. So that's how we really are able to put together a pretty accurate preliminary forecast for you to make an offer. Let's say that you have your offer is accepted, and we end up doing the due diligence. A big part of what we do that's maybe a little bit different is we've created technology. We have an application called Suite Inspector that's proprietary to our company. That will actually go in because we consider the interiors, especially in C and B class assets, to be death by 1,000 cuts. So we really like to go in there instead of doing that kind of this type of look on every.
Right. Yeah, you're holding your finger up and feeling the wind. Yeah.
Yeah, we really like to go in there. We go in there and build a template for each unit type, and then it'll completely inventory the entire interior of the units. It'll usually be about 350, anywhere from 325 to 400 different inventory list items down to every outlet. And then we build a template. It goes into the cloud. It gets put on all of our tablets. And then our due diligence team will come in about a day or 2 days later and walk all of the units. When I say all, 98% plus. There's usually one or two that we can't get into for whatever reason. And when we do that, we really, for an example, a 100-unit deal, we'll evaluate about 35,000 line items. We score it on a 1 to 5 basis, 1 being replacement, 2 being major repair or minor replacement, like a valve stem and a faucet, 3 being a minor repair, 4 being fully functional with useful life, and 5 being brand new. And then on the back office, myself, the COO, and the director of operations, we get together and we look at the deal, and we look at the market survey and what the comparable properties are doing. And we really want to not just take an inventory of what's there right now, but build what the schedule is, what we're going to do in the future. So for instance, if we have a fully functioning refrigerator, but across the street, they're getting $150 more in rent, but they have stainless steel appliances, we will price out replacing all of the appliances on that cost legend. So it really gives us a data-driven, it'll give us a 35,000 point thing where we'll know exactly how much money we're going to spend on upgrades, how much we're going to spend on deferred maintenance at each turn. And then we'll get a per unit turn basis of what it's going to cost. In our experience, we are accurate within a 5 to 7% range. And this is true in D and C class assets as well.
Wow.
So that we really like to do it by data so that we leave no stone unturned. Internally, we call it the full cavity search. I mean, we look at everything to make sure that we're not guessing. We really want to take as much of the guesswork out as possible. Same thing with the lease audit. I think that it's pretty conventional, but we go through and data dump all of the leases. We'll have somebody in their office going through them all, down to how recently they moved in. For instance, if we go into a property, I'm going to use a 100-unit example because it's an easy round number, and we see that it's being marketed as 99% occupied, and we determine that 60 of the tenants have moved in the last 4 months, we're really going to hyper-analyze those most recent move-ins, make sure that they haven't stuffed the property.
Mm-hmm.
If they haven't stuffed the property, when it gets to our operating forecast, our final one, we're really going to underwrite more turnovers on the front end, so that we're going in there with our eyes wide open, that the expectations are reasonable. So hopefully that's answering most of your questions. A lot of the other stuff that we do is pretty conventional. So as far as we'll have our preferred roofer go and do a roofing report. We don't do that internally. Asphalt, HVAC systems, or any other major systems like a large boiler. We'll bring in third parties. And then we also scope all of the sewer lines to see if there's, we have a plumber scope all the sewer lines. Incidentally, we have a scope. We'll use it for operations, but not for due diligence because the risk is too high if we miss something.
Sure.
The overall theme is, I'm just going to give you a little visual. I think of a property when we're underwriting in a due diligence is a big challenge, that big. All we do is cut those things into lists, cut those into lists, and we have all of the data put together, and then we aggregate it together to the operating forecast.
Yeah.
This does have a much lower margin of error. It sets the expectation right for the operator to, with the property management, that we both have the same expectations. And so that we know, because it's not a profitable business in property management if you have an unsatisfied client. It really isn't. So that's part of it. Secondly, as you know, sometimes you go through the due diligence and you have to do a retrade versus going to a seller and just saying, hey, the unit's interior looked bad. There were 20 that were bad and we want a $50,000 retrade. When you go in there with, hey, it really is bad. Literally, we have 57 out of these 100 units where the refrigerators are on their last leg or are leaking. And so when you have the data, it gives you a better argument for your retrade. Mm-hmm. So that's a very large part that we have with respect to the interiors. And on the exterior stuff, it's pretty conventional. I mean, I think most management companies do the same thing. Hopefully I answered your question.
No. That it's you know, I was really impressed when I saw, you know, those resources that you can provide to an operator, all things that an operator needs to be doing themselves, but when it's data driven like that, and you provide these, you know, I saw these, you know, charts and graphs, you know, relating, you know, when you do your lease audits, I saw that, you know, you do a risk factor audit, you know, based on concessions, based on things that are missing in the files, and based on, you know, what you just described, if they're, you know, they could be trying to cram people in before the sale, you know, all very powerful stuff. And, you know, and the fact that you've got such a tight, accurate, your numbers are so accurate around expenses, initial capex, and then, you know, in your operating forecast, it's very, very powerful. So
one other little benefit, and I'm sorry, for a lot of operators that are doing their first larger deal, or, you know, maybe it's the first one that they're doing on their own, they may have a little resistance from some of the lenders, especially if they're sponsored by Fannie Mae or Freddie Mac, any of the agency debt. When a lender sees that you have this much statistical data on the collateral, it's been very useful for them to even get the loan in the first place, because they have the backup in a statistical basis. And as we know, all lenders and bankers love numbers and data.
That's crack cocaine for them, you know. So that's you put it together for it. So let me ask you some rudimentary questions, because my listener base is I mean, I've got numerous people that have 1,000+ doors that listen to me consistently, and then I've got, people that are just getting rolling that frankly have started with small multifamily, maybe not even started there yet, but they aspire to do larger deals. So
they're the ones in 2 years that'll have thousands of units, in other words.
That's right. So let me ask you this. What questions should someone ask a prospective third-party property management company? Just high level. I mean, not all the high level, but detail. What are some important things they should look for when they're evaluating someone like yourself?
So there's no magic question, but it's really, how did they do the reporting? Is it GAAP reporting that'll be accepted by general accounting? Forgot what the other AP stands for, but
right.
I mean, that's a very, very significant part, that if it's a smaller company that has more feet on the ground in a certain area, it could be a great fit. You have to make sure that they have the back office capability to handle the reporting and everything. Secondly, and these aren't like a direct question, but something that you really want to determine, because with all the neat processes and everything, I can have the greatest processes in the world. If I don't have a good manager in the seat, it doesn't really make much of a difference. If I have horrible processes and I have a good manager in the seat, I'm going to have a good outcome anyways. It's typically how it works. So I would really kind of determine how they generate their employees, where they are in terms of when you talk to them, try to get a sense if, especially if you've been referred to them by another client, that if they're really prepared for the growth. And most of the growth preparation is not the back office and all that. It is being able to bring in the people. We're in a tight labor market. They have to have the best people. If they have the best people and culture, the properties will do well, even with some mistakes, which are they're kind of baked into the cake.
Sure. So dig into their employment practices. Dig into how they keep their people happy, how they screen their people,
and how they bring them in. Do they have a very exhaustive approach to get hired, and do they fire quickly?
Right.
And really, those are two very, very important aspects of personnel.
Mm-hmm.
Another thing that I would look is, and this isn't really a question, but this is just how to evaluate a property management company. If you're looking at an A-class property, you really want to see if this property management company specializes in C, maybe even D, B minus. And if it's an A-class management company and they try to do C properties, it's not a good fit. It's like trying to put a flat screwdriver in a Phillips head. It just doesn't work. For instance, we focus on B and C class assets, a little bit of D, and we have a little bit of A, but A is not our bread and butter.
Right.
You really want to make sure that you're putting the right group that fits in the same kind of what your ballpark of what you're trying to do. I believe this is debatable, but I believe that it's good to have a management company that has a local presence in the area versus one that flies around to little cities everywhere. I just don't think that they can give the unannounced visits by supervisors that way. So that's kind of my own opinion, but it's.
I agree completely. You need to be aligning with management companies that are managing the asset class you're buying, and they need to have a local presence. I totally agree with those two pieces. Now, let me ask you this: what should someone expect from their property management company? Obviously the reporting. How consistent should that reporting be? And then what sort of a communication channel, as an example, does Waner set up with its clients, with its operators?
So I can tell you about what Wehner does.
Okay.
Some of what we do is maybe what other management companies would consider overkill.
Okay.
But really, we have, depending on the size of the client, if it's a 100-unit deal, I mean, we'll have a regional manager and a regional maintenance for each property. If it's during you're going to purchase it, or even if it's being bought, you really want them to have looked at it. You want to have met with the regional manager, make sure that you have a good communication rapport with that person. Less important, but you just want to make sure that the maintenance supervisor is competent. You may not be very seldom are they actually great communicators, but right. You want to make sure that they're competent. Mm-hmm. And then you want to make sure that that you get the reporting How we do it, all of our clients we have a cloud-based software that we use. It's called Resman.
Mm-hmm.
And I think most large management companies use cloud-based softwares. So you really should have, what we do is give immediate access to all the rent roll, all the tenant data, and it's read-only access, so they can't change data, and they have immediate access to their bank account and the profit and loss. As we do it, so for the prior month, we provide the full financial packages, and in that we have the profit and loss, the cash flow statement, the balance sheet, the general ledgers, and 5 other boring sheets of paper too. So what we have is by the 10th of the following month, we provide all those reports in an email. Some companies do it on the 15th. That's totally fine, even if they do it by. The reason we try to squeeze it to the front of the month is that if there's something that we have to change, we don't want to already be half to 3 weeks into the month to pivot.
Okay.
You really want to have monthly reports. It doesn't have to be on the 10th like us, it can be the 15th or even the 20th. You really want to have the most important things that you don't necessarily need to be going through the P&L mid-month, but what you do want to know is where they're collecting, what type of occupancy they have, what type of turnover is occurring that month. We have, and this is something specific to our company, this may be overkill. We have what we call a daily report that we've paid to have developed and interacts with our software, with the management software. So they get, our clients, if they elect to, they get 5 days a week, they get basically what we consider the 10% of the data that gives them 90% of the picture. So it'll have, what have we collected? What is total to be collected? What's delinquent? What's bad debt? What's the vacancy rate? Which units are vacant? How many of those are ready? What is pre-lease? What's pre-leased occupancy? How many work orders are open? So it's really about, and that's about 10.
Wow, that's very impressive.
25 items. So that's something that you can keep a daily log on. Most of our clients only want it weekly. So you can set it up weekly, but if you could get that weekly, that'd be fine. Yeah. What I really would dissuade somebody from doing is getting the whole rent roll and looking at it every day. When it's that much information, you just won't look at it. I mean, that's just human nature. So you really just want it to be a snapshot. If you find an issue with delinquency or bad debt, then they'll usually log into our Resman software and start looking at the details or talk to their regional manager.
How often do you typically, should someone want to talk to the regional, or who would they be talking to more consistently?
They'll be talking to the regional, definitely the most consistent. If it's during the beginning of a property and we have lender lists and stuff like that, we have to have this roof replaced and this repaired per the loan documents, then there'll be more involvement with both the regional and the maintenance supervisor, because I really like to bifurcate those things and let the regionals focus on leasing, collecting, and retention, and the staff in the office, not
maintenance,
not sewer replacements that they have no idea and never done one.
Sure.
So we really tried to have a silo thing where we have people that are an inch wide and a mile deep versus somebody who knows a little bit about everything.
I love it.
Somebody in the company that knows a little bit about everything, and that's me. And there's only one of those.
Yeah. All right. So what do you expect from your clients? What do you expect from your operators?
Very basic. We like to be set the same expectations on the front end, whether we're taking over a transition or we're doing the due diligence on a purchase. But we really want to all be on the same page. What we don't want is we give them a forecast and then they go raise money by puffing up certain numbers. We really want to be all on the same page. And then very basic human decency to my employees. Candidly, employees are harder to get, at least for my company, than clients are.
Sure.
In most cases, even if keep in mind that we have a system, especially if you're in C and if you bought a D or you bought a B minus, there's literally hundreds of judgment calls that have to be made monthly. So I encourage people to use common sense that, hey, you make 100 judgment calls, and you would have, now that you've thought through it after the fact, you would have bought a cheaper type of toilet paper. I mean, we need to use some common sense on some of those items.
Sure.
So those are the main things that we expect. The other thing is we have people on two sides of the extreme tend to be the problems, kind of like our politics right now. So we have people that want to count every toilet paper square, and they just bog people down in details that really don't push the needle. Right. And then we have people that call us once every 2 years.
Wow.
And, we really think that it's a happy balance in the middle where you have involvement, you're at least involved on a monthly basis looking at your reports, so that if you want something different, that you bring it to our attention in a more quick fashion. But if you're buying a deal that has huge maintenance things and construction projects and maybe a huge reset of rental, or you're buying it at 60% occupied, then really you need to be involved weekly. Until it's stabilized, then it's a monthly thing. But
sure.
Really, you should have a weekly involvement. If it's something that is a high priority, in other words, it's going to affect the operations on site, that's the highest priority things, then when you send an email, the property management company should get right back to you within 24 hours. If it's a kind of a to-do list that you want, have reasonable expectations that if it's not high priority, that they have a week or 2 weeks, depending on how high the priority is.
Interesting.
So
Okay.
now you think of those things with a little bit of common sense. And
sure. Now you also manage the repositions on properties as well. Yes. You guys
sure.
you manage the tire refurbs.
Yeah. Our particular company, and this isn't everybody, and in fact, we don't even do this in San Antonio, I also have a construction management company. I have over 900 employees. About 140 of them are in my construction division. And so on that side, it's a fully different entity. And so it's always, you can go to somebody else, and 99.9% of our clients want to use us because they know that we're going to competently manage the process. So you get some of the one size fits all, but as far as if you're in Florida or something, there's great property management companies that do not have a construction wing. Right. I don't want to dissuade anybody from using a property management company that doesn't have that resource in-house as well.
Sure.
Make sure that you don't be afraid to ask questions politely and question. And we love having a second set of smart eyes look over what our assumptions are, so that we can get to the best conclusion. Even, candidly, sometimes a client will say, hey, can't we do it this way? And then we go, wow, we never thought of that. And then we implement it across the other 170 of our assets.
Sure. Good ideas come in all the time. You've got to be open and receptive to them. That's great.
You get great perspective when somebody even if it's somebody that doesn't have a lot of experience, if they have their money involved in it, they tend to poke holes through things and find great solutions that we may not find ourselves.
Sure. Yeah, I used
the question. So
I used to have in another life, I had a company with 60 employees, and I used to have these ideas for improvement events, and we'd put up a whiteboard, and all the staff would come up with ideas, and it was crazy. We implemented 60% of those ideas. I mean, these are people that are in, so employees sometimes do as well. So let me ask you one last question. If someone is evaluating a management company, do you recommend they go site visit, mystery shop some of the assets that they're managing? What sorts of things would you do in your evaluation process?
I think that's a great idea. That and like I said, you got to layer that on with common sense. So if you're going to buy a B+ asset or a B asset, you probably should go look at the properties that company manages that are B assets, versus going into, they may manage some deals here in Dallas in Oak Cliff or Fair Park. Mm-hmm. You really shouldn't compare what they're doing in Oak Cliff or Fair Park in South Dallas.
Those are A areas then, correct?
Those are D, if not.
Oh, those are D. Okay, I didn't know. I don't know Dallas well enough to know what's the worst and what's the best.
I'm sorry, and I should have been more educational on that. So
yeah.
If you're looking at one of their C property they're managing for a C class asset, or basically we don't really do these.
Yeah, no, that's very insightful. Yeah, we're actually buying a Dallas asset right now. We're raising money for it right now, and it's it's I was telling you before that we're gonna check out your outfit and see and start some dialogue, and I'll see you next week as well. I'd love to shake your hand. But well, listen, I really appreciate you being on the show, Ryan. I know you're a busy guy, and very, very impressed with what I've seen. And would love to get to know you a little better, and definitely.
I would as well.
Yeah, and definitely endorse you after if we end up working together for sure.
Absolutely.
So I appreciate your time, my friend.
Thank you so much, and I appreciate it. Can I give them my information of?
It's what's the website?
So it's Waner Multifamily. That's WEHNER multifamily.com.
Yep.
If you want to email us with any questions, it's info@wehnermultifamily.com, and we'd love to help anybody that we can. And the more we help people.
Now, your target market right now is Texas and Oklahoma, correct?
That is correct.
Yeah, awesome.
And we really, at this point, don't have an appetite to go outside of those markets.
Why should you? If you've got that big of an infrastructure where you're at, focus is power. All right, my friends, pleasure to meet you.
I appreciate it. It's very nice to meet you too, and you have a great program. I appreciate it very much.
Thank you, buddy. All right, take care. Talk soon. See you.
Bye.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.
Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws.